I said, hey, baby. Welcome to the Neighborhood Pulse. Wherever you are in life, well, you always remember the neighborhood. And who was that could tell you everything that was going on in the neighborhood? This show is brought to you through the financial support of our good friends, Kevin Ware.
Realty Executives Cornerstone.
Absolutely.
Absolutely. Give us a call anytime. 708-277-3913.
Yeah, please do. It's incredible.
I'd like to talk to them.
And of course, it's all real estate all the time on this show. We talk about lending. We talk about buying homes. We talk about refinancing homes. We talk about working on homes. It's all about real estate. And of course, you got the professional right here, Kevin Callback. With us today in studio is a lender from McHenry Savings Bank, Eduardo Martinez.
Yes.
I don't know why I always try to get a Mexican accent in there. I did.
Yes, Eddie Martinez with McHenry Savings Bank. I can be reached at 815-331-6428 or emartinez@mchenrysavings.com.
There we go.
Sweet,
Beautiful.
love it. And who else we got here? We got some other guy. I know.
And of course, you know me, folks. I'm also with McHenry Savings Bank. Just reach me at 815-331-6431. Okay. Jones at McHenrysavings.com as well. Today, what we want to talk about is, and why we have a lender in-house here, is we want to talk about 10 simple mistakes that could cost you your dream home.
Yeah, I'll tell you what, it's easy to make a mistake because you just don't know, right?
Right.
So, and some of these it seems so simple, you'd say, well, of course. But sometimes when you're financing a home, you think you're doing something to help your situation, and it does the reverse. And so we want to help you avoid those pitfalls. Mr. Martinez is going to help us out here and go through those steps so you will know exactly how to get into that dream home when you're ready and get the proper financing from McHenry Savings Bank while you're working with your realtor from Realty Executives Cornerstone.
Absolutely. So, Kevin.
Sir.
What do you think a mistake is? You throw out a mistake, we'll throw out the answer.
That's it. You know, my grandma, God bless her soul, loved her. When she passed, we went through her house and we found cash behind pictures. We found it in cushions. We found it on the mattress.
Books.
It was books. It was everywhere. Like, oh my gosh, there's so much money around here. If I would have known when I was younger, I would have, hey, Grandma.
I want to spend the night at Grandma's house.
That's right.
More often.
So a lot of people do that, and you know, unfortunately, they think, okay, I'm getting ready to buy a house. Let me stuff this money in the bank. So. Can that be an issue, Eddie?
Absolutely. I mean, the number one mistake is, hey, we're looking to buy a house. We need a bigger down payment. And next thing you know, people are grabbing cash from under the mattress, from, grandma's drawers or what have you, and make that cash deposit that, it's a no-no in our industry as well,
Absolutely. Yeah. Going in grandma's drawer is always a problem.
So the issue is after the bubble popped back in 2006, 2007, 2008, and we found that a lot of money was being laundered back in 2001 through banks. We now have to be able to trace and track that cash so that we know that you're not in, drugs or any illegal type of business, which would be cash heavy. So what we look at as lenders is consistency in, if you have a direct deposit, it's usually about the same amount or close to the same amount. If all of a sudden you have that box of that shoebox full of cash under your bed, Kevin, and you're like, I need to put this in, and all of a sudden there's a $5,000 deposit out of the blue.
Yeah, where'd that come from?
Those are red flags.
Yeah. And here's the deal. Even though you worked hard for it, because let's say you're doing side jobs or something like that, we can't use that money to qualify you for
Right.
the loan closing. That money now becomes as if it has never there.
And a lot of times, like in the service industry, you're a bartender, you're a waitress, you
Yeah.
you do something where your income is based on tips.
Mhm.
A lot of people don't put that in a bank.
Right.
They just use cash.
Right.
And so you got to kind of make deposits along the way as you go, and see how that works out. And now I got to move my shoebox from under the bed because Kent told everybody where it was at.
Yeah.
So we're gonna move it now.
Right. And hopefully you got big feet so you can hide more money in it. But
That's right.
But truthfully, that's the tough part about, and we see it quite a bit, that people are like, well, let me just throw all this cash in there. Well, not really. You can't do that.
Or more often than not, they'll hand that money over to someone, a relative, a parent, to do a gift. Well, those gifts also need to be traced and accounted for. So those are important things to consider when buying a house and making these type of deposits. Once you have the application in.
Right. Absolutely. And a lot of people, now this is something we've been running into a lot, is certified funds. So when people get a cashier's check for earnest money, not that it's a mistake to do that, it's just a little bit different and it's harder to track or trace because you're taking cash from somewhere and getting that cashier's check, whether hopefully your bank, but now you're going to need to provide additional documentation, right? You have to show your bank statements and such.
Yeah,
to
and
verify that.
yeah. So even if it's a certified check, we still need to track where that came from, right? Or who
Sure.
gave you that cash, or
Right.
just because it's a certified check doesn't. I mean,
Right. Get it from anywhere, right?
You get it from Walmart.
right? Yeah,
69 cents.
that's right. Right. So, yeah.
Crazy stuff. So I'm getting ready to buy a house, and you got to buy furniture, right? You got to buy lots of stuff for the house.
Hey, Anna.
So should
Welcome
probably do that
aboard.
right away, right? Should run right out. We're under contract. I've got this house that's 3 times bigger than what I'm living in now. There's no way I'm gonna be able to fill this with furniture. So we see people going out and making those large purchases. How does that affect their buying ability or anything of that nature?
Think of the number one mistake is you already did the loan app. Your DTI is already calculated. Your income's calculated. Now
DTI is
your debt to income, right? And now you're adding more payments to what we had as had as far as the bottom line payment. Now you're increasing the numbers. You're changing the scenario, which could effectually affect the approval of the loan. Once we take another look at your credit down the line, once we're getting closer to close the loan for you.
Sure.
So I had a customer. We were doing a refinance for them, and their debt to income, and we have to stay in a guideline for debt to income, so we can't go over a certain percentage of debt to your income. And this was back when refinances were taking about 45 to 60 days back in 2020, just because there were so many of them. And during this time, their main source of transportation pooped out on them. Okay. They went out during this time and bought a $50,000 vehicle,
That's a nice guy.
which took them from a payment of, for their regular vehicle or whatever, from $200 a month, which we got them approved on, to their payment was almost close to $700 a month
That's a
for a
killer.
vehicle.
Yeah.
Now, they didn't call me. They didn't do anything, right? And they went ahead and they did this because, well, they needed it.
Right.
So what happens, folks, is right before we close the loan, we pull your credit again. Now, it's a soft pull,
Right.
but we pull it again and update it to make sure that you haven't gone out and done anything like that.
Right.
Yeah.
Okay.
Yeah. Wow.
And so when we did that, now we have this $700 loan payment,
Mhm.
and now we have their old one as well because it hadn't cleared off of, it hadn't,
Right.
the bank on the trade-in or whatever
Right.
hadn't. So now I'm way out of balance, and this is literally a couple of days before we're supposed to close this loan. Fortunately, it didn't knock them way out of proportion, but we had to prove that they no longer had the $200 payment as well.
Right.
It was just kind of a headache and very stressful then right towards the close. So if you're working on purchasing a home and you're working with a lender and something like that happens, give them a call, let them know, let them help you walk through it and how to take care of it.
Right.
Because and that's a weird thing, like an emergency. But to your point, I went out and I bought an entire living room, dining room, and bedroom set, and it's 36 months, same as cash. And I'm not going to make payments until it gets delivered, and it's not going to get delivered till I close. That still shows up on your credit, folks.
Right.
Yeah, it does.
And it shows up that here's the amount that you're approved for. So
Wow.
you can't, you just hang tight.
Right. Right.
Live on a card table. Does anybody have card tables anymore?
Yeah.
Live on a card table,
Right.
and then once the loan is completed, then go out
And I think to your point, Kent, that's our jobs as lenders is to just keep reminding them how's everything going, anything new, any new purchases. These are things that a good lender will always advise your borrowers to make sure you don't make any crazy purchases.
Right.
You run your credit or co-sign for someone. Those are things that will definitely affect your approval of the loan down the line.
Absolutely. So we had this recently, and I didn't realize it was going to be a problem. Is they had some collections, they had a charge off.
Mhm.
They qualified for the mortgage. They were able to use a percentage, some calculation to make sure they could still afford the mortgage with those items.
Yeah.
But then they decided to pay those items off. They're like, you know what? I'm going to pay this off, this collections, and it negatively impacted them. Speak to that because that just sounds weird. If you're paying off collections.
I mean, paying off collections, those are the what ifs, right? And it's different with every loan, different with any lender that you're working with. We are a bank, McHenry Savings Bank, but we also have vendors that give us approvals for loans. They might have different stipulations,
Right.
so those are things that you consult, you get a game plan together. Because if not, then again.
If you're approved with a collection or that charge off, right?
Yeah.
Then if you're going to do anything like that, let you know. Because if they do pay off a charge off or a collection, there's a lot more documentation they have to get.
So a lot of times you have to understand how the credit bureaus work and how things work for you and work against you. So you can have a collection out there, and it might be 7 years or 5 years old or something like that, but it hasn't reported. It's just out there as a collection.
Oh yeah.
Okay, so the credit bureau is going to look at that as a debt account. It'll, and you think it's, oh man, this is really tearing me down. Not necessarily, because it may not have reported since 2017, but it just shows collection. Okay.
Got it.
Now, what happens is as soon as you pay that off, now they have to report, and it's a live collection, which then is going to pull your credit score down and maybe hurt it. So you really got to kind of look at it. Again, talk with your lender, because the lender has, like Eddie and I can call the credit bureau and say, hey, what if they paid this this collection off? Would that help or hurt? Wouldn't do anything. Okay.
Right. Exactly.
Right.
Yeah.
What if they were to pay this credit card off? No.
What
It
about
wouldn't hurt.
in conjunction with that? What if they close an account? If they say, you know what?
Right. And that's what you read my mind. It goes hand in hand with collections. If you pay them off, now it's going to show live. Or if the difference between pay off your credit card but don't close it, right? Or have a small balance, so that you still are reporting, you still have it moving and it's in your favor versus hurting you,
Right.
if you close it down.
So closing an account can negatively impact your
Absolutely.
credit,
Mhm.
right?
Yeah.
Okay.
Because your credits figured on how long you've had accounts open, amount of credit that you have outstanding as opposed to amount that you have available.
Right.
So if you had, let's just say you had it paid off or whatever, and it was a small one, let's just say it was a $500 credit card, and you closed it, now you have 500 less. Now your percentages change.
Right.
You just got rid of $500, and maybe that was your oldest
Right.
credit card, and now you're like, now it looks like you got new credit. So you should, during the home lending process, in the process of getting that home, don't close any accounts without first checking with your lender, because they can literally dial the credit bureaus and say, hey, what if?
That's it.
And that's access that every lender should have. Direct contact with the credit bureaus. We can work with, maybe you're not ready right now. Let's do a rapid rescore. Let's look into what we can do today.
Yep.
Ask those questions that not a lot of lenders do, and just get the best plan for your borrower so they can successfully buy a house and buy their dream home.
Absolutely.
With Kevin Callback.
Yeah, that's right. Yeah, come on, folks. So I want to ask, you just mentioned a term that a lot of people may not know, which is rapid rescore.
Mhm.
So now I've worked with you guys, and you guys have really, gone to bat for folks and gotten them loans when they're in a tight spot.
Mhm.
But you helped them out. It's just talk about a rapid rescore for,
You want that
for
one?
a minute.
Go ahead, Ken.
All right. So every creditor has to report. Every creditor has to report that each month, right? So
Right.
I have to report to the credit bureaus each month on this line of credit. And they do it a specific date, whether it's the 5th, the 15th, the 25th, whatever the case may be. So we might say, okay, you need to pay off your JCPenney credit card or pay it down to X amount. But then we would have to wait maybe till the 15th.
Till it
The cycle.
Till they reported to the credit bureaus. And all of a sudden, that may take too long, or we want to close before that, or something of that nature. So we're kind of stuck. Well, what your lender should be able to do is that rapid rescore is get the proof that that's been paid off, contact the credit reporting agency that they work with, who then reaches out to the JCPenney at this point and says, was this paid off? Okay, great. They get the proof that it was paid off, and they update it then with the credit bureaus at that point. So it's rescoring it before the end of the
process,
month, or before people were to typically report.
right.
Yeah.
Right.
Now that usually ends up costing money. A good lender will eat that, right? So at McHenry Savings Bank, we don't charge the customer for that.
That's good.
But there are some. And ask yourself if you're getting charged for that, why?
Right.
So those are just some of the questions. So,
But it's well worth it, whether you're paying for it or your lender is. It's worth your credit, knowing what you can do today to get you where you need to be tomorrow.
Right.
Absolutely.
Rob, it's funny. You could. Yeah, it's a fire sale over there, literally. Right. Right. Absolutely. So what we really are trying to help people understand is that there are things you should and shouldn't do in the process of getting pre-approved and getting and after pre-approval,
Getting to close
in the process while we're buying a house. And sometimes that's a 20-day contract, sometimes that's a 45-day contract. Absolutely. Right.
Good stuff.
That's
Good
it.
stuff. There you go.
Look at that.
There you go.
Hope you're not getting in trouble at work
Yeah.
watching us in the middle of the day.
That's
Appreciate
right. Well,
That's
that is funny stuff. So it's we were into this recently actually, and I want to give a shout out to Joanna on this one. Is her sister bought a car and she put it in her name to help her out, and then the sister, because didn't have the credit at the time, needed the car. They have a joint bank account, and it wound up. So she essentially has that on her credit. So co-signing can be a challenge, right?
Oh, absolutely. I mean, you could have two scenarios where they've already had that on there, where they're co-signed for a vehicle. If we can prove that the payments are coming from a different account, from the sister or cousin or whoever, then we can, not count that towards their overall debt to income, right? But if it's new credit that we're pulling while doing the transaction to buy a house, then that's going to definitely affect.
I see. 'Cause, when you co-sign, there's a lot that goes into that. right? A lot of rules that go in, and you take on a lot of responsibility.
Yeah,
actually.
that's your debt.
That becomes
If
essentially
it's showing up on your credit report,
Or
it's your
they'll
debt.
say, I'm not the main co-signer. You are a co-signer.
Right. Yes.
Yeah, you're equals
That's right.
in this debt mess for sure.
Yeah.
It's kind of crazy.
Absolutely. And a lot of people do it out of the goodness of their house, right?
Mhm.
Of their heart. Yeah, I'm always thinking houses. They do it out of the goodness of their heart. It's my kid. It's my nephew. It's a cousin. It's my sister. It's my brother. It's my mom. My dad. They're down on their luck. Whatever. And at the time you're doing it for all of the right reasons.
Sure.
However, now when we get into purchasing a home, all those right reasons, we really don't give two shakes of a lamb's leg.
Right.
They're all the wrong reasons.
But as Eddie said, now we have to be able to prove without a shadow of a doubt that you're not the one making those payments. So that means who you co-signed for, Kevin, your sister, has to give us all of the canceled payments for 12 months, for the past 12 months.
Okay. Right.
And they can't be late as well.
Right.
Okay. So, and there are some people who are like, I'm not giving you that information. Well, then you're not getting the house,
Right.
or getting approved for the loan. Right. So very, 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 very important to take that into consideration. And then just know, if you aren't making the payments, that's fine. Your sister can make all 11 payments, and if you make one, it goes against your debt.
There you go.
Yep.
That's it. It's crazy.
Oh, but she gives me cash. Again, we can't track that cash.
Cash is an issue.
Right.
Yeah,
She gives me cash every month. I make the payment.
That's it. We've all been in that situation
Same
where
thing.
somebody's co-signed for somebody, and the person they
Yep.
co-signed for has not made those payments or has fallen behind or something of that nature. So we've all seen that.
Yeah.
I mean,
Or all the payments are done from that person, but you made one or two payments. You got to start all over.
that's it.
Or on the same side of things is you and your sister have a joint account. The bank that you got that loan from made you be on the account as well. But my sister pays it. Your name's on the account that it's coming out of. That means you pay it.
Yep.
It is now your debt.
Yeah, that's the thing is
Yeah.
they have a joint account.
Yep.
So this joint account it is a problem. It's problematic.
Yeah.
Obviously, but it's kind of crazy.
Yeah.
I mean, parents, we all do it for the right reasons, like you said, right? Now, you said something about late payments there, and I know if you're in a house currently and you're getting ready to move, you're getting ready to sell your house, COVID came, things got a little tight, you were late on a payment, you missed a payment. How does that affect you? Is that a big issue? If you on your current mortgage you're late or miss a payment, but you're selling it, you sell it and you want to buy another house, can you?
I mean, absolutely. A late payment's a late payment. I hate to say it. I know the situation is what it is, right? We're all affected by it, right? But those are just obligations that we have to plan for ahead of time. That's where having at least 6 months reserves comes into mind. And these are things that we educate our borrowers, our customers, to plan for things like this that you don't expect.
Absolutely.
So the answer is yes, it will affect.
So
Yeah, I mean, then we talked about forbearance a few shows ago.
we did.
So it's kind of that same thing. But yeah, you can probably get away with 130 day late.
Okay.
If it extends past that, everything else better be crystal clear, or it better be a strong deal. You might be able to get an exception, but if you're more than 130 day late,
Right.
then boy, you got to kind of roll it out 12 months. So if it's a rolling 12 months as well.
Right.
So if you
tough.
missed a payment in December, I got to wait till probably December.
To sell and buy and do the whole thing, right?
Yeah.
Oh, that's tough.
I mean, you can
That's
sell.
tough.
You're going to be renting. You're going to be renting for a while.
Right.
Yeah.
That's right. Yeah, you can sell. No problem. Yeah, it's not usually. Yeah, it's kind
Yeah.
of funny actually. So the I had a question on the tip of my tongue there, and it was late payments, reserves. So I follow Dave Ramsey and find him on DaveRamsey.com, but they say 6 months reserve is what you should have on a daily life. And we know that from all the reports I've read is, 90% of the people have less than, 1 month's reserve in the bank. Maybe those numbers aren't right, but it's a high percentage of people are pretty much live check to check.
Yeah.
Which is kind of tough. And we see that on occasion, minimum down and such.
Yeah. And it's hard on a day-to-day basis. And then you are ready to buy a house, and you kind of look and go, oh man. And then when you do have the house, things happen, COVID happens, things like that.
Right.
Somebody gets sick, put in the hospital, whatever the case may be, a car accident. I mean, all these things kind of happen. And I will tell you that your lender, Eddie, right, you're not too sympathetic about that.
No, absolutely not. And those are things that, again, just kind of touching back on, the reserves piece is, talk to your borrower, talk to your customer about what's important, your wants versus your needs.
Right.
These are conversations that not a lot of people are having. These are fundamentals that we should all follow. And that's where it will allow you to have those 4 to 6 months reserves, and you won't even think about it.
Yeah.
You pay for cable, but you're never home.
Right.
Makes no sense, right? So
Exactly.
those are little things that you can just tune and tweak, and it will definitely help you a lot.
There's a lot of sleeping debt that we have that, like you said, cable that we don't use, or, we go to Starbucks maybe every day or twice a day. We could cut that out. I mean, there's so many things we could probably.
Come on.
Can you bring a lunch to work?
Bring lunch to work, say.
Right. Yeah.
And bring for a friend,
Yeah.
share, and be like, hey, bring me some tomorrow, would you?
Yeah. So really, I mean, as we talk about the 10 things that could steal your dream home is, you and your lender are good friends for, from the time you apply to the time you close.
Yeah.
You're good friends, and they need to be
absolutely.
involved with everything and everything that you do. So
From before you look at a house
yeah.
till you close, and you can't stress that enough. There's so
Yeah.
many people that want to look at houses like, well, I just want to look first and then get pre-approved. Well, that's not the best thing, especially in a COVID society,
Yeah.
is people don't want you just looking in their house when you're not pre-approved and ready to buy,
That's right.
because it's, for some
Hey,
people,
everybody, parade right through here.
Right.
Hey.
Touch everything. Cough and sneeze in my house.
You want to try out the restroom?
Right.
I just
Right.
found my 10 commandments of buying a home. I've had this in my email for a long time. I'm gonna
So Peter says, given all the examples you've shared, suppose you have 3/4 or 4/5 of the total to purchase a property in cash and just want to finance the last quarter of the last fifth balance. Is it easier to purchase a loan at that point? Is it easier to get a loan at that point? Here's what we say in the banking industry. If you don't need the money, we'll gladly give it to you.
And for cheap.
And for cheap, right? Yes, it is. The more skin you have in the game, the lot quicker and a lot friendlier we'll look at you and go, oh, okay, right? There are still some guidelines that we have to. I mean, if you have a credit score of 450, which I think are 400, which is the lowest you can get, we're going to say maybe you should take that 3/4 to 4/5, and that's the type of house you should buy.
Right.
because credit worthiness, we'd be like, wah, 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 wah.
That's right.
And that's it.
Right.
That's it. That's crazy.
But if you've got good credit or a couple hiccups along the way, yes, because now the loan amount is a lot smaller, and the value of the home or our risk as a lender also is a lot smaller. So if your house is worth $300,000 and you have 3/4 of that to put down, and we're only going to do a loan of 1/4 of that, the bank is like, yeah, we can do that because it feels good, and you're not going to walk away from this. So you'll make sure that you pay our little loan because you have so much invested. So your
Sure.
risk at that point is greater than the banks.
Right.
Right.
And so we'll take a look at it that way.
But I think what's incredible right now is, I've been doing loans 10, 15 years, and the credit required right now is 620, 640. I mean, it's incredible.
We can do loans
But
at 580.
Again, have the reserves, have a good down payment. Those are things that will obviously affect your approval, whether you go FHA or conventional.
Right,
So
right.
Here's a great question. Thanks, Ram. I appreciate that. There are many apps on the App Store that lend you instant money when you need it. What's better, apps or banks?
I guess it just depends on what you're looking at buying. Are you looking to get a car? Maybe do an app. Who knows? But if you're looking to buy a house, you definitely want to talk to a financial expert that will not only go over the do's and don'ts, right, but also guide you from start to finish versus just an application on an app, and then there's not a lot of follow through or
There's been a lot of communication.
Right,
They're
right.
Not giving you that advice that you guys can give and see and talk about, and just give them that direction so they don't step in a pile.
So there's the and I like the way that you answered that, Eddie. It really kind of depends on what you're borrowing the money for. On a car, and you're at Carvana or whatever, and people at Carvana, you're welcome to go ahead and become a sponsor of the show. Just reach out to us at 216net@gmail.com. Hey, you do it. It's a car. If you're buying a home, not only is it that relationship, but when we talk about all the moving parts of a home purchase right up to the loan close, is if you are just a number on an app, and we got you pre-approved, and you're ready to sign those papers, and they've forgotten about you, or they haven't wired the money, or they're chasing something to get that loan closed, then it may be a little bit more difficult as you hold on, let me call this 800 number, and you sit on hold.
Yep.
Right.
Oh yeah.
And I think too is you do an application, you're out with your realtor, you're looking at houses. Now you see something that you really like, and it's a little bit more than what you applied for. Who's gonna do that, pre-approval letter and run your numbers right away?
Right. I'm sitting in the house right now. We really like it.
Yep. And this market is just like that too.
Yeah.
This market is moving fast, and hot. That's
Yeah.
for sure. But they can always get money at the McHenry Savings Bank
Always.
from Eddie Martinez.
Yes,
right here.
yes.
So,
And
Eddie,
how
where
would
can
they reach
you?
Eddie?
Absolutely. You can reach me at 815-331-6428 or emartinez@mchenrysavings.com.
Awesome.
And of course, if they want to buy a house, Kevin,
Hey,
they're going to reach you at.
Give Kevin Callback a call at 708-277-3913 or call Kevin K at gmail.com.
You got any listings out there right now?
Oh, baby. I got an equestrian property that is fantastic in Wadsworth. It's on Thoroughbred, 36863 Thoroughbred. It's 4.5 acres. You can build a stable. You can build a coach house. In addition to, right, there you go. Eddie's looking, right?
Yeah, hey, buddy.
Yeah, but it's just an amazing house. Only at $650. I don't know. It's just a really great house. Needs a little updating, but it's priced to move. So
how many acres? 4 acres.
4.5 acres.
4.5
yeah.
acres
get a
of
couple
horse
of-
farm, but basically
Yeah,
equestrian. You said.
Yeah. So that you could build a
Got
stable
some
or
outbuildings?
coach house. You can build them.
Okay.
And so it's zoned so you can build them.
Okay.
So it's
So it's just a beautiful house.
it's a beautiful
on
house,
4
indoor
acres.
spa. So they got the resistance
Wow.
swimming pool. They got the hot tub. They've got a ton
Fantastic.
of bedrooms, a baths, an in-law situation, 3-car garage, wood shake roof. I mean, it's just really full finished basement. I mean, it's fantastic.
Yeah, that's beautiful.
So I'm looking to see a great family move into that home. So
Awesome.
Yeah, that is
Absolutely.
nice.
it's fantastic. I'll tell you. And then Kent Jones, we can reach you at
Sure. You can reach me at kjones@mchenrysavings.com. Thank you.
I love it. So that's it. So what do you think about combining debt, like taking it all and just consolidating it all into one big ball?
Before the loan or after, or is that what you're using the equity in your home for? Is that what you're saying?
Yeah, so you're getting ready to buy a house, right? So you take it all and you get all these little cards. So you say, let's take them all together and put them on this one card and max it out to get all these things combined. So I just got one payment, one nice, easy.
Nice, easy payment.
Yeah, typically what you want to see, especially in a credit card situation, is having half of the balance or less outstanding. Because anything over that is just trickling down your credit score every month. So
Right.
obviously not the best idea is to consolidate. Do that before you do a loan app for a house, or definitely right after you sign the closing documents that you are now a new homeowner.
Guys, so you're better off having 3-4 credit cards, less than half, than having one that's, that's
Absolutely.
a little bit bigger. And that would be outstanding to not have any debt.
Another thing to avoid, one of the big mistakes that a lot of borrowers will make is what we would say they ghost you. All of a sudden, we get them pre-approved, or we're working on a loan for them, and there are conditions and things that we need to clear up, and we need to communicate to get this done, and you can't be reached. You change your number, or you don't answer emails, or whatever the case may be. That's one of the we see that a lot in our industry. It's as if they're like, okay, I applied, I'm done. No. Right? How do you help people work around that? Or
I think it's really in the introduction phase is setting the tone. This is an important purchase for you, especially if it's your first time buying a house. Then we're going to treat it as such to ensure that we have mutual respect for when we're trying to have communication to and from, because it's a two-way streak. And these are things that can delay the approval, the CD going out, the closing disclosure, all the fundamentals from the start of the application to the closing. If there's not clear contact, and you can be the most aggressive lender and calling and sending emails, but if it's not a two-way streak, then definitely can affect different phases of the loan, and that's where the introduction is the most important, is to establish a good relationship and a game plan as well to ensure that you have constant communication to and from throughout the whole process. Would you agree?
Yes.
So once they apply and they get you all their documents and your W-2s, bank statements, pay stubs, et cetera, and you submit it to underwriting, they're done, right? The loan's pretty much approved.
We're pretty close.
Yeah. We're close. We're not there. We're close.
We're done inputting the application. That's about it.
So conditions.
Yes.
And I know we're getting a little off track here. We're talking about conditions, but those conditions could be a number of different things.
Right. So what I think one of the biggest mistakes is, and Eddie, correct me if I'm wrong, is when you get a pre-approval, you think that is the approval.
Right. Yes.
So what do you mean? I got a pre-approval. No, that's great.
Right.
And usually what a pre-approval means is it was run through some sort of electronic underwriter or something of that nature. But that once we have the contract on the house, that's when the real work for the lender starts.
Absolutely. You can have a scenario where you get a lot of things up front. There's a few conditions. Takes them a while to get those conditions cleared for you, whether it's this document or your HOA paperwork, your homeowner association fees paperwork or statement. But now time has lapsed. Now we need new pay stubs because they're only good for a certain amount of time. So these are the important things that we stress in our daily lives, is getting everything in a timely manner to ensure that we get you your dream home that you've been dreaming about for a while.
Right. Yeah. You don't have a mortgage until you have a mortgage. That's something else I learned.
That's right.
That's right. In this business over the many years is it's not done until the paperwork is signed, sealed, and delivered.
And each scenario is different.
Yep.
And each borrower is different. And if you're going through a divorce, we're gonna need to see your divorce papers, the ones stamped by the court.
Yep.
Right. If you receive child care, we need to see the court papers. Now, they may not give you those or ask for those papers in the pre-approval process. Right. Okay. But they're going to need it. The underwriters are going to need it, and the processors are going to need it. So really, a pre-approval just says Yep, from what you've told us and what we've looked at and what we've put into our system, um, we can more than likely do this job for you,
Right.
right?
And then you get your miner's cap on and your shovel and you start digging,
Yeah.
right?
That's it. We have to make phone calls to your employers to
Yeah.
make sure that you still are employed, and that the information that you put on the app is truthful. We have to verify bank account information. We have to get with your insurance agent. I mean, there's a lot of moving parts. Pre-approval says, "Yep, go look." The approval, and it's really when we get the what's called the clear to close.
Yeah.
When we have the clear to close, now the loan is approved.
Yep. I like that. I like those words. Every time I hear them,
Yeah.
I smile. That's for
And
sure.
so the conditions that you were talking about, real quickly, in the conditions that you were talking about is we submit the package, right, to the underwriters, and they're going to say, okay, I get this, but now we need this. Thank you for this, but now we need this. And those are the conditions. So one condition may be we can't approve this loan without an appraisal. So we have to have an
Yeah.
appraisal. And that's going to be a condition. Now, we can't get that clear to close until that appraisal comes back and the home appraises out, right? We may have a condition for W-2s.
W-2s, getting the right statements, like if they're retired,
Mm.
your pension statements. Those are all important. Social Security award letters.
Yep.
I mean, these are things that it's
Trust documents, right?
yeah, absolutely.
Oh,
That
trust,
those get,
yeah.
yeah, that's another show right there.
right.
That's
But,
crazy.
but truthfully, so don't be mistaken that when you're pre-approved,
Right.
and the approve.
And if you're a seller, keep that in mind too.
Yeah.
Make sure whether you have a pre-qual, a pre-approval, or
Mhm.
where you're at in the process. Yeah.
Yep.
Mhm.
So your agent should be checking that for you.
Yeah, and your lender should also be talking directly with your permission to
The seller,
the,
for sure.
the,
Or
the, the
selling
realtors
agent.
or the
Selling,
agents
yeah.
involved, the attorneys and
Absolutely.
the case may be.
I think that's beautiful when you have that relationship with your realtor and your lender, and you get those permissions, of course, because now you can help leverage each other out on items that you need.
Right.
You might have better contact with the borrower at that point in time for us to get this last condition cleared, to get our clear closed.
Yep.
So very important.
That's it.
Absolutely.
I'll tell you. It's almost that time, isn't it?
Yeah,
So
we've got 3 minutes yet.
I've got the 10 commandments of buying a home.
Let's hear them.
Let's see. Well, I'm not going to read them all. I'll just read a couple here because we don't have a lot of time. Thou shalt not change jobs, become self-employed, or quit your job. Thou shalt not buy a car, truck, van, or you may be living in it.
Yeah. So
Thou shalt not use
hold
credit
that
cards
thought.
excessively.
For our self-employed friends out there, there will be other things
boy.
that we'll have to look at and ask for too. Since you
Right.
brought that up, there are some different guidelines we understand 100% understand that you write off a lot of things. That's
Sure.
one of the advantages of being self-employed. But at the same time, if you're looking to borrow money, you're going to have to show some sort of income.
Absolutely.
Now, a good lender will have a calculator and some things, be able to look at the last 2 years of taxes and average out things like that. There are also lenders out there who can do, bank statement loans,
Mhm.
so that we know that take a look at your cash flow, things like that. We don't do that at McHenry Savings Bank, but even though you may only say that you show $2,000 a year, Kevin, because you're self-employed. We can take a look at your taxes and figure out that, well, okay, you actually made $2 million last year.
Yeah, we're actually in a scenario right now with a borrower who they're still looking. There's no contract yet, but every other lender said, oh no, your Schedule C says you made $6,000 a year. There's not much you can get approved for on that end, but using all the right calculators and calculating everything, you'd be surprised what they actually made
Mhm.
versus what just shows on your Schedule C.
There you go.
There you go.
Let's not get audited on that. That works, but looks good. This is awesome.
So if you're self-employed, give us a
Self-employed,
call.
yeah.
We do wonderful things with people who are self-employed. Eddie, how do they get in touch with you real quick?
Yes, you call me at 815-331-6428 or at emartinez@mchenrysavings.com.
Realty Executives Cornerstone, Kevin Callback at callkevink@gmail.com. We'll send you out 10 commandments of thou shalt nots.
That's right. Absolutely. Hey, thanks for jumping in here today. Of course, we want to thank our guest, Eddie Martinez from McHenry Savings Bank, for joining us. Great stuff on the 10 things that probably you should not do or that could hamper you from getting your dream home. Stay safe, stay healthy, everybody. And remember, if you're going to buy a house, buy it from that guy, finance it from that guy.
You got it.